Have you ever worried about having enough money in retirement so that you don't run out? Or if you're still building wealth and you haven't retired or retired early yet, have you worried about that you have enough money one of these days when you do retire? Well, that's a topic I've thought a lot about. I actually spent 2 chapters in the book, Retire Early with Real Estate, writing about that. But in today's episode, I'm going to condense what I wrote and share it with you. And we're getting started right now. And yes, this is a Clemson football Tigers jersey. I'll explain more in a second. Welcome to Coach Carson TV. My name is Chad Carson. You can also call me Coach. And this is a show all about investing in real estate so that you can achieve financial independence and do more of what matters. And real quick, I'm recording this on the day of the national championship game. I used to play football at Clemson. And believe it or not, I was a middle linebacker. And so I'm having to sport my Clemson Tigers jersey. Not sure if we're going to win or lose. I'm thinking win. But in any case, I want to support my team, have a little team spirit. Go Tigers. And as promised, today I'm going to talk to you about how to not run out of money in retirement using real estate investing. And as I like to do, I'm going to draw a little bit, share my ideas with you, and we're going to go there right now. I want to start off saying that I have 2 goals for my own retirement portfolio, and perhaps you have something similar. Number 1, I want it to cover all of my expenses, so my personal expenses, and hopefully with a cushion. So being conservative there, make sure you have enough money now and in the future to cover all your expenses. That's one goal of your retirement portfolio. But then the other goal, equally important, is that it does that without ever running out of money. And that's the topic of today's video, is how do you make sure you cover all your expenses and not run out of money with your retirement portfolio. Now this is a graph that explains the rough phases of what you might go through when you build up wealth, when you start saving money and trying to invest and build up wealth over time, what your money looks like. Hopefully that's getting bigger and bigger and bigger. And then you reach what's called the financial independence number, where essentially your investments can afford to pay for your overhead, your personal expenses, like we just talked about. And then you go through another phase, which is called the withdrawal phase, where you're actually living off of your investments. And in some cases, that means you're having to sell some of your investments, and maybe you're living off some dividends, maybe you're living off some interest. You might also sell some of your investments. And so you just hope you have enough here when you reach the peak and you stop earning the most money, because you're going to start almost like you have a bucket of water and you're starting to take water out of that bucket, and you just hope you've saved up enough in the beginning so that you always have enough and you don't run out of money before you run out of life. That's kind of what people are worried about, right? And in traditional financial planning, now this is not my expertise, but I know if you've read this at all, you might have heard of something called the 4% rule. And the 4% rule, and typically in traditional planning where you own stocks and bonds and things like that, says that you can take out about 4% of your net worth, of your investable net worth, and not run out during a typical retirement period, which I believe in the studies that they have done on the 4% rule was like 30, 35 years. But what that means is if you had $1 million in net worth that you were investing, you could take out about $40,000 per year and have a reasonable chance of still having money when you're done, when you're at the end of your life. And maybe it'll go down over time, but hopefully in a lot of cases, it could also go up. So instead of losing money and having to kind of watch your money dwindle over time and just hope that doesn't run out, then in some cases, if things go up, you take some of your money and then the rest of it you leave in there could also keep growing. Now there's a lot of factors that go into that. There's the timing. There's something called a sequence of returns risk. What happens if the market crashes like right after you retire? There's a lot of things to be concerned about with the 4% rule. And again, this is not a video on that. What I want to talk about is real estate investing and some of the unique properties of living off of your real estate investments that make some of this a little bit simpler. Now, one of the core strategies that real estate is going to allow you to do in retirement, it's going to sound very simple, but you can avoid a lot of the problems of the 4% rule and a sequence of returns risk and a lot of other things people worry about with running out of money if you just don't touch the principal. What do I mean by that? That means if you save up $1 million and you're going to use that money as your investments to retire off of, then you have a hard time running out if you never sell any of the investments you have in the first place. So if you just keep them, you don't touch the principal on that, and then you live off the earnings. That's a big part of what real estate investing is all about. Now, the alternative, this doesn't mean that the other strategies, for example, if you had an all stock and bond portfolio, typically what happens is let's say you had an index fund and that index fund produced a dividend of 2%. That's kind of the average, at least when I'm recording this right now. And you wanted to withdraw 4%. Remember the 4% rule? Well, if the dividends are only producing 2% and you want to live off 4%, in order to get 4%, you're going to have to sell some of your principal. You're going to have to sell some of the stock. And in most cases, if the market's going up, if everything's good, it's really not a problem. You got more this year than you did last year because the stock market's going up. This becomes a problem when the stock market goes down. And your price of your index fund was 100 yesterday, and now it's 50. And so you're having to sell your stocks at $50. Now, this is a little bit beyond the scope of this video, but in real estate, for example, you have one property, let's say that's worth $100,000, and let's say it produces $6,000 per year in rental income. So $100,000, $6,000, and let's say you had 10 of those houses. So 10 times 6,000 means you'd have $60,000 per year in rental income. Nice little simple portfolio of 10 properties. You live off that rental income, and you don't have to sell your properties in order to access that money. The big difference here, the kind of core difference, is that the $6,000 per year is about a 6% return on that $100,000 you have invested, whereas you're having a 2% dividend right here. And stocks and real estate actually tend to do pretty evenly over the long run in the total earnings, if you include, because a lot of the money the companies make in the stock market is retained, and they retain those earnings, they reinvest it, and the wealth grows over time. But the issue is the timing, that if you need to have the money this year, this is a lot more consistent. And so real estate investing, at least when you use that as the core of your retirement plan, you can live off the earnings, you don't have to touch the principal, and in a really simple way, you've eliminated some of that issue of being concerned that the core part of your portfolio is going to go away, or you're going to run out of money and not have enough when you're getting later in life and you can't work to make any more income. Now, I don't want to leave you with a picture that I think real estate investing is the only way to accomplish this, or that everything's rosy, because in the investment world and the real world of anything, there's always two sides of the coin. There's always challenges, there's pluses and minuses. Real estate investing does a great job as a core part of your portfolio of producing income, of allowing you to be able to control some of your destiny. It's very entrepreneurial, but you do have to be involved with it, right? It's not as passive as a CD in the bank or a stock index fund or a bond. So I think you know that if you're watching this video, you're kind of aware of some of the more involvement you might have to have. It can be very passive down the line, but real estate investing does involve some more active management of your portfolio. It also has some risks in that you have all your money and your properties in one bucket. And so one of the ideas that I really appreciated as I thought about this for myself and kind of built my own retirement portfolio was by a guy named Darrow Kirkpatrick at caniretireyet.com. So it's a blog, and he introduced the idea, and he's not a real estate investor at all. There's other assets that he invests in, but he had this idea of an income floor first and foremost when you're retiring, and then you also have investments where you invest for the upside. So I see this part of your real estate portfolio as a really good first step of creating an income floor. So those 10 houses that I talked about before, if that's your number, if you had 10 houses and each one of those produced $6,000 per year, $60,000 per year, that'd be a really nice place to be first, especially as an early retirement, because you have a floor. You know kind of the basics are covered. You have your debt paid off on a lot of those properties, or maybe all of those properties. And so it's a low risk income floor that you can build upon. And for people who don't have real estate, they might do things like having laddered CDs or bonds or dividends from stocks or annuities or other things that can help them get that more guaranteed income, that steady income. That doesn't mean that's the only thing you invest in. One of the key principles of being sustainable with your investments long run is having some kind of diversification. See if I can spell that right. So you don't want to have all your eggs in one basket. And so your income floor might be the first part, but then you also have things like maybe you have a 401k an IRA that is invested in completely different things. Maybe, and this is kind of the route I'm moving towards, of having index funds and maybe some bonds eventually, but currently just equities for me at my age. And then also maybe for some of you, these aren't necessarily things that I'm experts in, but you have some CDs, some things that have lower interest, some bonds, maybe even things that some people use in retirement, like annuities, which are contracts with insurance companies. Lots of gotchas and issues to think about with annuities, but there are some simple versions that can produce some income. But the point being, you don't want your long-term ability to produce income, to have wealth, to not run out of money, to depend on any one thing. You don't want to. There's just things out there that we might not estimate or think about. So over the long run, having some diversification in addition to our core income floor of our portfolio is a really good idea. But I think focusing on the income floor first is what gets you free from the job, gets you free from having to know you can kind of breathe a sigh of relief. Hey, I got that part taken care of. Now let me also start diversifying and spreading things out as well. So to summarize all this, we started off talking about the whole goal here is that when you retire, you don't run out of money. And you have this build-up phase, you build wealth, you grow your wealth, and then you start living off of it. And the ideal is that you take money out of your retirement portfolio, you live off of it, and yet it can still go up. And even instead of going down and risking running out, it might even go up, and it keeps up with inflation and gives you a big cushion. That's the goal here. And nothing's guaranteed. There's no bulletproof strategy. But what I talked about here was that idea number one: don't touch the principal. If you don't have to sell your investments, it's really hard to run out. You're at least going to have something in the end if you don't have to sell them. If you can live off of the rental income is produced at a higher ratio of what you pay for a property. Yes, there's some challenges to that. You've got to learn how to manage a portfolio. You've got to learn how to buy the right properties. That's why you're watching this YouTube channel. That's what we're trying to figure out together. But if you don't touch the principal, it goes a long way towards alleviating that concern of running out of money. And then you also have to diversify. You don't want risk of one thing happening to one property, one group of properties, or one asset class that can knock you out of the game over the long run. So diversification, getting even out of real estate, maybe into multiple markets, and then the other asset classes is a big part of having a sustainable retirement over the long run. And then most importantly, I have this as my theme here on the show, is to do what matters. Money is just part of the equation. You're trying to do this so you can worry less, and you can live more, you can enjoy your life, you can travel, you can make an impact on other people, you can do what matters. We can't leave a retirement conversation without emphasizing that and talking about that. That's the whole point here, is that money is just a tool, a vehicle to get you to the point where you do more of what matters. So what do you think? Is it something you're worried about, running out of money in retirement, or one of these days when you do retire, having enough money so you don't run out? I'd love to hear from you. Let me know what your thoughts are, how you're approaching this challenge of not running out of money, and whether you're using real estate investing as some or maybe all of your approach to not running out of money in retirement. And if you like this video, be sure to share it with friends and help me spread the word to other people. And be sure to hit the subscription button and that little bell so you don't miss anything in the future. Got other videos coming down the way that I think you'll enjoy. Thank you so much for watching today. My name is Chad Carson, Coach Carson TV, which is all about investing in real estate so you can achieve financial independence and do more of what matters. See you next time.